I want to go to Keith Fitzgerald now, also following these market developments, and Rebecca Walser Wealth Management. Rebecca, when you look at a lot of the things that are going on, including talk of more stimulus, and they maybe can cobble together something in a lame duck session, it seems like a Herculean leap, but they're looking at about a $900 billion package. How doable is that? And for the markets, if it were to come to pass, how would they react?
Well, obviously, we're going to be ecstatic in the markets because Neil, this has been such a tough year for so many industries and certainly small businesses. So the market is going to appreciate stimulus. We definitely need it, certainly in the airlines. But to get it done by the end of this year, it's going to be a little bit of a challenge, right, Neil? Everything's going to have to go exactly the right way. And I think it's doubtful that we'll actually see it before this December 31st, unfortunately.
You know, looking at that, if it doesn't come to pass, Keith, you could argue, well, it didn't look likely anyway. But now we're into, the new presidency come January 20th, and what a President Biden might be able to cobble together, even with a Republican Senate, if that looks like it's going to be the case. What do you think?
Well, I think, unfortunately, that is something we're going to have to contend with. I think it's disgraceful that Congress has held this up. It's disgraceful that they can't come to an agreement. They're going to go home to their Christmases. 12 million Americans are going to lose their benefits. Makes me madder than a word I can't say on television. But from a market perspective, we're going to have to prepare for that. Volatility is going to be the traveling companion right up into the new year. Then we're going to get our look at what the cure looks like or what the vaccine looks like into June. I think that's when we really get back to normal. Stocks are going to try to get ahead of that, so I'm not too worried, but we're still going to have to deal with that interim volatility.
Rebecca, this is more political in nature, but I'm wondering about the market impact. Obviously, pretty soon you get the Electoral College gathering to sort of cast the final votes on all of this. That's when it becomes official. Now, the president will likely never concede. He might honor the will of the Electoral College, but not happily. How will that go down if he's still last man standing, last man fighting, doesn't attend the inauguration, might counter-program that by announcing a 2024 run of his own? How would the markets digest all of that?
I'm really expecting two things to happen, Neil. Either President Trump's legal team is going to produce enough evidence in the next 2 weeks to make some state legislatures move, and the Electoral College on December 14th will see a change if that's the strategy. So that is one way that I think they're trying to move. I don't know if we'll get a Supreme Court resolution that will really make a huge difference here. So that's one thing I see. I also see a very remote possibility with some of the news stories that we've heard lately that this could not be in the courts at all, and it could be more of a criminal situation escalated by some kind of Department of Justice, and that might circumvent the entire process we're used to. Either way, the markets are not going to like the uncertainty. We're used to sort of a smooth transition of power. We've never had anything like this happen before that I'm aware of. And so if they're able to submit and prove their case, as they are saying that there is a case, then it is going to be an upheaval in the United States that we've never seen. And the markets don't like volatility. So I expect the markets will react in a very red way. They're not going to like it.
All right. December 14th is when the Electoral College meets. The president has said in the past, Keith, that that's the point at which he'll honor the will of that. I'm sort of paraphrasing here. I think it was something like that, but he might not be happy about it. Might say they made the wrong decision to go ahead and meet and cast the votes that would make Joe Biden the next president. But does the market really care one way or the other whether he's a happy camper with the results or not, that he is going to leave on the 20th and call it a day?
That, Neil, is a very interesting question. The expression happy camper. I think the markets are going to be happy with earnings, which frankly are pretty darn good, and remain good. Growth, which is still out there, regardless of who actually takes the White House, when and how. I think that's the advantage for investors, because if there is a sell-off, volatility can be harnessed. Buy low, sell high is how the game's played. So actually, I'm kind of hoping we're going to get some volatility, not because I relish political discord, but because we're going to get it.
All right, I like that strategy. Well, come on, volatility, give me your best shot. Rebecca, there have been a lot of examinations of this market rally, how broad-based it is. Our own Charlie Brady, he's our stocks editor, the Nostradamus of markets, I call him. And it's interesting to note that he has discovered how broadening this is beyond just obviously the averages, the Dow and the S&P, the NASDAQ, but how it's broadened out to the Russell 2000, how a lot of smaller stocks that hadn't been part of this are now part of this. Does that give you hope that this widens out in the new year? Again, the political stuff, the pandemic stuff notwithstanding, we all hope that that settles down and that life goes on. What do you make of that?
I think it's excellent, and it's exactly what we need to hear, Neil, because if you think about this, we have had a great year considering, all things considered, with the tech stocks really saving the day on the NASDAQ. And we can't have that going forward. We can't have just one sector surviving and travel, entertainment falling by the wayside. So much of our economy, as you know, is consumer spending based. So to see the rally and the results broadening out to beyond just tech is really encouraging, and it's certainly what we need. And in order to really recover, it needs to continue. It needs to be at every really level of industry to really make it sustainable.
When you look at the tech stocks, we're showing some of them now, Keith, and the Amazons, Apple, Microsoft, Alphabet, they're all up smartly today. That comes kind of counterintuitive to the notion that if you got vaccines, this idea that people have to stay at home and rely on these guys to keep making money. You could make a point that not so much, but they continue to advance. So looking at technology as a sector, even post-pandemic or winding down from the pandemic, can you make a credible case for that?
Absolutely. Well, let me rephrase that. I think it's credible. Here's how I break this down. You've got two kind of groups of stocks. You've got the stay-at-home stocks. That trade is going to come apart and rather terribly over the next few months. Look at Zoom, for example. Or you've got stocks that are going to make our world turn. That's the Apples and the Microsofts, the Palantirs of the world. Those are going to continue even long after the pandemic is done because we're going to need them for the next episode of whatever comes our way. Big data is important. It makes the world go round. So I think there's a very good case to continue to invest, to stick with the winners, to broaden out to Rebecca's perspective, but keeping in mind what actually makes the world turn.
A part of the world that's not turning, even though they've come off their lows, the cruise line stocks, the airlines, while they bubbled around and picked up a little steam from their April lows, they're still woefully depressed. Can you make a case for them, Rebecca, especially with the vaccine's arrival, that people itching to travel, itching to get out, that they look like promising investments? Or would you hold off?
It's greatly, it will be a great, if you buy low and it turns around, it's going to be a great winner long term. I was just driving into the office today, Neil, passing by the actual bay in Tampa where the cruise lines have not been for months, and literally said to myself, when am I going to see boats here again? Like, when are they coming back? Let's get them back. So I don't know if I'm really concerned as a lawyer and liberty, personal liberty. I've seen this being thrown around in Europe a lot right now about this vaccine passport type of thing to travel, and I'm really leery about that because I don't think that we should go into any kind of situation where you have to have a vaccine. There will be some Americans that will take the vaccine, and hopefully we can get back to a level of normalization. But to start to go down a road where you're being forced to do things so you can even travel is something that the travel industry should be extremely against, because there's some people that they'll not want to take something that's this new and this fastly developed.
Rebecca, final word. Keith, want to thank you as well. We'll see what happens, guys. In the meantime, we're focused on Georgia right now, the peach state, not the umpteenth count of the presidential vote, but the